taxman?
Okay, so when you look at it broadly, there are no new taxes actually that were introduced. That's a first. If I look at the
no increment taxes.
The history of tax amendments, you look at tax heads like presumptive tax over the past 10 years, I think it has morphed over 4 times. And this year coming, and there are no major changes in tax heads like that. I think it's a good positive. But when we say there are no new taxes that were introduced, it doesn't mean that procedurally there are no changes. But a businessman watching us and following this discussion needs to ask themselves what were the changes. And the changes were broadly in terms of enhancements in the effectiveness of those existing taxes.
Okay.
So the existing taxes like income tax, like talk about the tax heads like rental income tax, value-added taxes within the tax procedures code, within the stamp duty. There were changes in there that are very, very important, and any business operator needs to lay attention on.
Okay.
Yes.
And speaking of tax amendments, now let's get into some of these particular taxes. For example, the rental tax.
Yes.
I would want to at least, first of all, understand what was the main essence behind it. I think it has been here for time,
yes.
Not so long though, but at least if you want, you can tell us what's its intention and why is it mandatory for people of that sector to pay it?
Thank you. Now, first we need to create the difference and maybe shed some light on the difference between rental income tax and property rates.
Okay.
That are collected by the municipal and local governments.
That would be very helpful.
Yes. So the property rates are collected by the municipal government, the local governments. Within Kampala City, KCCA collects these.
Okay.
I think that's around, it goes to the property owner.
Okay.
That is one. And it is, I think, at a rate of 6%. Those are property rates. Now, there are exemptions on these property rates. For example, where you are, it's owner occupied and residential, it's my home, there are those exemptions. There are other exemptions maybe on homes of the cultural leaders, faith-based institutions, the heads of those institutions, and so on and so forth. And so when you look at these property rates, they are not the income taxes that URA collects. So the rental income tax, as we collect it at Uganda Revenue Authority, is tax on income that you have earned as the owner of that property. So it must be generating income. That's first thing. Now, it is generating income in terms of, and it should be immovable, that I need to say. It should be that you're earning income maybe from tenants. These tenants could be a teleco that is renting that space to set up a mast. It could be income from when you're letting out this property to someone who has set up a garage in that space. It could be a carpentry workshop. It could be, you could be staying in the house. It could be a commercial building or a residential building, and so on and so forth. So you, the landlord, the owner of this property, and income from this property, are supposed to pay rental income tax. Now, previously in the financial year that we just closed, the tax rate for this property, for this income tax on rental income was 20% if you're an individual. And now it has changed to 12%. Okay, it has shifted, the tax rate has shifted downward from 20% to 12%. But then you need to understand that the threshold or the starting point at which the taxman will start taxing this rental income tax has moved to 2,820,000. Okay, now that is, so if you're an individual, you're Michael Masembe, and you are earning from this property, and the tenants are paying you, let me put it per month,
okay,
235,000. Then it means you have rental income tax to pay to Uganda Revenue Authority, and for all amounts above 2,820,000, there is going to be a tax of 12%.
So that is actually supposed to be remitted to
Uganda Revenue Authority. Yes.
Okay.
So now it means if you earned 5 million from this property, you have to get 5 million and subtract the 2,820,000, which should not pay tax.
Okay.
And then the balance
is where we are going to pay the tax.
At a rate of 12%.
So the 2.8 is yours.
Yes. It is
non-taxable.
Yes, it is a basic that is laid out in the law for anyone who is a Ugandan, and it's expected to attend to the basic.
Okay.
The basic needs, and then at the same time the other expenditures that you could have incurred to set that property ready for rent. Now that is when we are talking about Michael Masembe.
Okay.
But there is when the owner of this property, like the case is for most commercial buildings in most busy districts, is when the owner of the property is actually a company. Now, when the owner of the property is a company, then it means your tax rate is going to stay at 30%, like the case has been.
Okay.
But now, while in the previous financial year, you were allowed deduction up to over 75% of the expenditures from your gross rental income tax. Right now, you're advised, according to the guidance that the amendments have given, that you will only be able to deduct or to subtract from that gross rental income only 50% within that particular year.
Okay.
Let's go back to the example of 5 million that has been earned from this property. If 5 million has been earned, then it means, and you've gone through expenses
that
of
is the
2
5
million.
million you're earning as your client,
yes,
your
the
tenant
rent,
is paying to you.
Yes,
okay.
the rental income tax. So it means, let's imagine you spent 2 million as expenditures on that property.
Yes.
Now it means, yes, 5 million minus 2 million,
3 million.
3 million is left, and that will be taxed at 30%, which is 900,000.
The 3 million.
Yes.
Okay.
The 3 million, which is the balance, is taxed at 30%.
That is
giving us 900,000.
So you're left with 2.1 maybe.
Yes, yes. But now let's imagine a scenario where you have spent actually 4 million within a particular year.
4 million, like 5, that is the only money you've brought into your business?
You spent 4 million maybe to paint,
okay,
or maybe to rework the glasses within the rental property, and so on and so forth. Expenditures,
yes,
the garbage and everything, security for that property, such that you can make it habitable for the tenants to pay you the rental income that they pay. So you spent 4 million to make the property ready for use, but at the same time you only earned 5 million. Now you realize that your expenses are above half of the 5 million. And yet the restriction is you can only deduct 50% within a particular year.
Okay.
So what you will be allowed is that you're going to only use 2.5 million, which is half of the 4 million as expenditure. So we are going to say, yes, you spent 4 million as expenditure for this property.
All right.
But for one particular year, you can only spend as expenditure to declare to the taxman only not beyond half. So we say 5 million minus 2.5 million. Okay? And we tax the remaining 2.5 in that particular year at 30%. Now remember, there is another 1.5 million that we have pushed to the next financial year, which you can use as an expenditure in that particular year. So you cannot deduct all your expenses in a particular year.
All right. Michael, let's also put it in the perspective of I am a landlord.
Yes.
And I'm having 10 houses, of which each for example, each tenant is supposed to pay 500,000. Let's say I have 5 houses inside the fence,
yes,
and each client is supposed to pay 500,000 each tenant of mine. Yes. How much am I supposed to remit to the taxman?
So that's you have 500,000 from each tenant.
Yes.
500,000.
That is 2.5
yes.
monthly.
So that is 6 million.
Okay.
Per tenant in a year.
Yes, please.
Okay. 6 times you have how many houses?
I've got 5.
You have 5. Okay. 6 times 5.
So that is 30 million a year. That's from these 5 houses.
Okay, let's just take it at 30 million in a year as your expenditure. I mean, as your total rental income.
Yes.
So what have been your expenses?
It may be around 3 or 4 million, maybe.
Okay, let's
But
take
maybe roughly 2 million. I think.
2 million. Okay, so it means you have spent 2 million
Okay.
within a year,
Yes.
but then your rental income has been 30 million.
Yes.
So we get, you're an individual.
Yes.
Oh, if you're an individual, regardless, we just get the 30 million and subtract the 2.82 million.
That is the taxes you're supposed to pay.
Yes.
Okay.
2.82 million, which is the basic that should not be taxed.
Okay. 2.82. So that is basically your money off,
Yes.
off the taxes.
Yes.
Okay.
So the remaining, let us imagine it is 27 point something million, is going to be taxed at 12%.
Okay.
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 So we would need a calculator to quickly
For the 27
work
for,
that. Yes.
for that. I think the viewers can do that for the
Yes,
meantime.
yes. So that would be the scenario. But now where this person was a company, still you've earned 30 million from your houses, and then your expenditures have been 2 million. That leaves you 30 minus 2 leaves you with 28 million. The 28 million will be taxed at 30%, and that will be the tax that you will have to pay.
Okay.
Yes.
So I think I've got to realize that there is a 2.82
Million
that is
for
non-taxable.
individuals, yes.
So that goes back to you. So then URA has to subtract and go with the other.
Yes.
So among this, the amendments from the rental tax, what were the amendments that you made before we actually go into a break? Is there any amendment that was made, or it is simply that?
Yeah, basically that was the amendment. But now what our taxpayers, and from the feedback that we're already receiving, the important thing is for taxpayers to note is that for the year that we have just closed, financial year 2021-2022, that we have just closed, you're filing your tax returns according to the old position, where rental tax was at 20%,
Okay.
you being allowed a deduction of 75%.
All right.
Okay, as offsets, as long as you can show that these were actual expenses that were met.
Okay.
But for the new year that we have just entered, your provisional taxes and everything, you need to consider the new position of 12% for companies, I mean for individuals, and for companies, knowing that you cannot offset within a particular year beyond 50% as deductions.
All right.
Yes.
And I do believe all the viewers are actually following up on more of our discussion here. You can go into our Twitter, that is Smart24TV, to give your opinions in regards to the tax amendments for the financial year 2022-2023. This is Smart Means Business. We're looking at the whole scope of the tax amendments for this new financial year. We're already in the first month and quickly getting out of it, as we're still in the first quarter for the financial year of 2022-2023, and that is where our topic is. Basically looking at the tax amendments. Where are the tax changes? Were there some changes that were made or not? Michael, before we go into a break, first of all, I will need some clarity.
Yes.
Were there any taxes that were changed, or should we expect any increment in taxes or any new tax this financial year?
The other area where we have seen changes has still within income tax.
Okay.
For example, when you look at transport, because you see we are land linked as a country, we don't have a sea port. We import maybe like through Dar es Salaam, through the airports, and through Mombasa. There has been something existing, and I think the business community has been having pains with this.
Okay.
On the withholding tax that we have been charging on transporters. So a transporter from maybe Mombasa or Dar es Salaam on a truck is driving your items and merchandise from the port up to here. Whatever they have been charging you, previously we have been charging 15% withholding tax on foreign transport. And now ideally the transporter, knowing that, they have been consistently adding that tax cost within the price that they have been charging you as a businessman in Uganda. And the amendment that has happened inside here is the withholding tax has been scrapped, such that our business persons can have a fairer transport charge from the transporters, for they do not have to face a withholding tax of 15% again, as the case has been last year from the URA. So I think that is, we need to see, with this amendment, we need to see transport costs going a bit down. Yes, if it wasn't for the fuel scenario that we are having, the prices going up, we should be seeing a drop a bit in the prices of transportation, especially for items that have been embarked from outside Uganda.
All right.
Yes.
And now after the break, we're going to be discussing something to do with importation of old vehicles in the country. I think URA is regulating that one pretty much with this new financial year, and also looking at the other amendments in the 2022-2023 financial year, and what is the best way that the tax revenue mobilization can be a reality here in Uganda. How can it be promoted in the country? Those and more are some of the discussions we're having after the break. Stick around. Good morning.